Boom.
Five,
All
four,
right.
3, 2, 1.
Here we go. Welcome, everybody. This is great. And people are coming in. This is fantastic. So let's get started officially. Welcome, Chris, to our deep dive into Solana kind of event. You are our guest. You are the person that is diving deep into Solana with us. So before we kind of get started in kind of diving deep, I would love to just kind of hear a little bit and let everyone kind of know, who are you? Like, what's your interest in Solana? You know, what do you know, like kind of like a little bit of your background. Then we kind of start doing a primer on what Solana is.
Sure. Hey everybody. Thanks for joining in and listening in. My name is Chris McCann. I'm one of the general partners at Race Capital, based here in Silicon Valley in the San Francisco Bay Area. We focus on all things in the infrastructure layer, including financial infrastructure, DeFi infrastructure, also a bunch of things around data infrastructure, transaction systems, basically any low-level plumbing stuff that tends to be the areas that we get the most excited about. Before that, I previously spent 5 years at Greylock Partners. I started and ran all the network and community-based ecosystem stuff we did. I was also involved a lot with a lot of the emerging market spaces that we were looking at. So in like the 2014-15 timeframe, Greylock made a handful of investments in the Bitcoin space, including Coinbase, Blockstream, and Zappa, all within that timeframe. And then I guess my larger story, and sort of tied into Solana a little bit. So when I left Greylock and before Race was founded, I did not a lot, but I did a handful of angel investments, primarily in the crypto and digital asset space. So in 2017, I was one of the earliest users and investors for this very tiny exchange called Binance when it was first starting. It's a much longer story on how that one happened, but I'll kind of truncate that one a bit. And then in 2018, I guess more pertinent to this conversation, I was one of the very first angel investors for Solana when it was first starting. I previously knew Anatoly through a lot of the other previous work that he did. He was a former core technical architect at Qualcomm. He was an infrastructure engineer at Dropbox. He was a really, really, really impressive guy even before Solana. And I basically told him, whatever you do, I don't really care what it is. I am more than willing to support you in you know, whatever you're thinking of next. And then Anatoly, who's the co-founder CTO of Solana, he sent me the very first V000.1 version of what would become the Solana white paper. And so I helped give him a lot of feedback, and we talked through it. And then now my partner, Edith Young, at the time, she was at 500 Startups. So she also invested in Solana at the seed round. And then Solana actually joined the 500 Startups blockchain accelerator track. So that was actually where they sat for the first about year or two of the life of the company itself. And so we just used to, you know, work together all the time. They were literally like in the same office. We got to meet Anatoly, Raj, the whole team, sort of see the whole beginning of it. And so I have a lot of admiration for the team and what they've built so far. And we're going to get a lot more into Solana specific stuff. But I guess just to wrap up the background side, so that was 2018. And then in 2019, for the fund, we were one of the earliest seed investors in this other very tiny exchange called FTX, which is mostly focused on the derivative side. And then since then, again, I'm a huge supporter of anybody and anybody building anything in the Solana space. So I've helped a lot of teams in the earliest days when they were very first starting, when people were evaluating this stuff. I just tend to be a very early supporter for a lot of these projects. Yep. Yeah, so Solana is what is colloquially referred to as a layer one protocol. It's basically an underpinning protocol where many things sits on top of it. That could feel very jargony, and you're probably like, what the hell is layer one? What the hell is a protocol? So if you want an even more simplistic definition, all these layer one protocols is basically the bottommost source open ledger. So there where all of the actual transactions actually sit. And it could be simplistic transactions, like I send something to you, you send something to me, or it could be a little bit more complex transactions where you have a contract where it's not doing a singular action, but there's a if-then statement embedded into it. There's a little bit more of a programmatic element. But all layer one protocols is they're the lowermost ledger itself. Most of them by nature tend to be open source. And then these things are developer centric for other people to build things on top of. And these can be DAOs, these can be DeFi things, these can be NFT things, but all this stuff is effectively built on top of the protocol itself. And then different layer ones have different considerations around them. Like Ethereum is the biggest with the most amount of developer traction and the highest TVL around it, versus Solana was really purpose built to be high throughput, high transaction speed. But there's other ones with different considerations around it, either around privacy preserving guarantees, or some have geographic centricities to them or whatever. But that's effectively like what a layer one protocol is. Yeah, I guess maybe helpful for this is to delineate two sides of it. So there's the Solana blockchain and protocol itself, which people are building things on top of it. So this is primarily geared towards developers that want to build something. Like you're probably not going to write contracts or interact with Anchor or whatever, unless you're like making or creating something. So when you look at all of the developer documentation and how you build things and all that sort of around it, it's all geared primarily towards developers. You as the end user would not be directly writing your own contracts or whatever. Maybe in the super hardcore power use case, but for 99.9% of the people, you wouldn't do it. Then I guess maybe another bucket in your head you can think of is Solana, the native asset. So Solana, the token. So you as a user might want to trade Solana on a centralized or decentralized exchange, or send Solana to somebody, or very similar to in the Ethereum has the ERC20, where people can create their own token on the Ethereum blockchain. In Solana, it's the same thing, although theirs is called the SPL token. So keep it simple. You could have the USDC SPL token, so we can send dollars back and forth through intermediated through the Solana blockchain, but we're effectively doing dollars, if you will. So that's, I guess, more of the trading aspect. And then third bucket, I guess, is you as the user of an application. So if you want to buy an NFT that was minted on top of Solana, like one of the degenerate apes or whatever, you would be a user of Solana via a wallet, something like a Soleil or Phantom, or pick your wallet, whatever you want to use. But you would be interacting with the chain to do what you want. So again, that could be a DeFi context or NFT context or whatever. I'm just using the NFT one because it's a little bit simpler to imagine. So yeah, I guess there's these different personas of developers, traders, and users. And then there's ancillary people kind of around the ecosystem itself. So all of the exchanges need to plug into these things. The wallets need to plug into these things. The oracles need to plug into these things. But I would kind of group that up more into like the developer category, if you will. Yep. Yeah, maybe let me answer this in three ways, I guess. So one, it's interesting, like, again, back in like the 2013-14 timeframe when I was in Greylock, when we invested in Coinbase and Blockstream and Zappa and all that, the crypto or Bitcoin space, it was very simple. It was very small. It was very constrained. There weren't really, it was basically just Bitcoin at the time. There was really nothing else. And there was the products and companies and services built on top of it. Now it's almost kind of funny to me where people refer to this as like the crypto industry, but it's not really like a singular thing anymore. Crypto can be referred to multiple protocols and blockchains, multiple native assets. You have things in the consumer layer like NFTs versus things in the developer layer versus things in the financial layer like DeFi. These are all totally different market spaces. And so if you wanted to keep up to date with the bleeding edge of everything going on across the whole space, you would drive yourself crazy. This is, I guess, what like people like me in this space try to do. And like we're in all these Telegrams and Discord groups, but it's very illegible. There's so much stuff going on in so many directions. And by the way, this conversation is only focused on Solana. This is like one ecosystem and one piece of it and all the stuff going on. Imagine this times 10 or 12 or 13 or whatever. Trying to keep all up with all this stuff would drive you crazy. and so I guess very similar to how VCs look at things in the normal world, a lot of those lessons apply in the crypto space as well, with maybe like a few added things of difference, if you will. So one, on a basic level, it's people that we know about or are referred to or like we know to be good citizens, who are building something new or experimenting with stuff or have pointed me in the direction of, hey, you should check this thing out. And again, because I've been involved with the Solana space for so long, there's a lot of trusted people I know who will send me kind of random stuff. Two, which I think is probably more importantly, it's, I think, things that you are personally interested in. And again, for like raise capital for the fund, like we tend to focus more on like, low level infrastructure layers type stuff, no consumer oriented stuff. But I think a lot of the consumer oriented stuff is interesting. Gaming related things, NFT related things, not my background, not my sweet spot, but like, I love to learn about this stuff and play around with it. The biggest thing I always suggest anybody to do is if you really want to learn about this stuff, use it. Like actually set up a wallet, buy some Solana, put it in there, use a DeFi thing, pull it out. You don't have to do it with like large sums of capital. Like start with $100, like $1,000, whatever is a small amount to you, $10. Like it literally doesn't matter. But like the point isn't necessarily to like maximize returns. Like literally just use it to like learn yourself. And I still do a lot of this stuff with me today. And then maybe like the more interesting aspect in the crypto space is in addition to trusted sources and just being personally interested in things, there's also large communities around this and communities who are very passionate about this. I think when you mentioned, when you tweeted this about Solana, you got a whole bunch of follows and shares and retweets. So like, there's people who are really into this stuff. And I guess the interesting aspect of the crypto space broadly, in addition to the Solana space, is a lot of the teams, projects, and people are either anonymous or pseudo-anonymous or are hide behind a avatar, like a picture or whatever. And so it's also not always apparent like exactly who's working on a lot of this stuff. And so a lot of these things actually tend to be facilitated through more communities rather than anything else. And I have a lot of background in communities and I feel like I kind of understand communities, but this is like the really weird aspect that like most people have a hard time parsing. Because it's not just like the VC gatekeepers and your friends telling you, like literally like a lot of these communities are bottoms up creating the stuff that people like literally don't even imagine. And they're doing it from like a community network based orientation, not necessarily a top down founder based orientation. Yeah. Let me let me go through maybe like one full example. And again, for people who have like for anybody listening, for people who have played around with it, this is probably a little bit more basic level, but I guess people who are looking at this for the first time, maybe this might be a helpful recap just to do everything. So one, to interact or use anything in the Solana ecosystem, you're going to need a wallet that you control. You can't just do it from Coinbase or whatever. It has to be something that can be usable within the Solana ecosystem. The main wallet that most people are gravitating towards at this point is this thing called Phantom. So if you just go to phantom.app, you can download it. It's kind of similar to MetaMask if you're familiar with that. It's a little browser extension that sits in there. So you download Phantom, and then this is going to force you to create a wallet. So you're going to have to go through the experience of creating a wallet, having a private key, and then figuring out for yourself how you want to secure this private key. Because you can't just paste this in your node editor and save this, online or whatever. Like you gotta safeguard this. Either writing it down or splitting it up. Like there's a bunch of different ways you can do it. And again, I guess this is only the context if you're doing like a couple $100. Anything more than that, I'd probably highly suggest getting a hardware wallet. So then you'd have to figure out how do you set up a hardware wallet and get that to connect with Phantom. Just that alone, if you went through that process, like you're probably better than most. But I guess to continue that, so now that you have a wallet set up in whatever form or fashion that you needed, you're going to need to input some amount of Solana currency into it in order to use the wallet and play around with stuff, which means you're going to need to buy Solana from somewhere. So you can use an exchange like FTX or FTX.us, or I believe it's listed on Coinbase now, so you can use Coinbase, but you're going to have to transfer it from whatever exchange that you use, that you've inputted fiat into, and you're going to need to transfer it into the wallet that you're using through the public key. So that just that process alone of setting up wallet, transferring internal public key, all right, like that's like pretty good to start with. So now you have the basics of, you have a usable wallet filled with assets that you can do something with. I won't go too crazy. Maybe we can just use one kind of example. So then from there, now you're ready to actually use an application. So let's say you use something like, I'll use a DeFi application, like a company we invested in, which is called Saber. Saber is like a cross-chain liquidity DEX in the Solana ecosystem. And most people are using it to farm. So if you have stable coins, you can sort of earn an interest by being a liquidity provider on this. So you can go to the farm section on Saber. You could look at the different pairs that you need, and then you will need to convert your whatever asset you inputted into there into the two pairs that you need. So for example, let's say you want to keep it simple. Let's say you want to farm the USDT, USDC pool. You will either need to buy or convert into USDT or USDC. And so you will most likely either do that through a centralized exchange, or you could use a decentralized exchange like Radium or something in order to do that. And all this can be done within the Phantom wallet just by clicking around and switching. And then now once you have your USDT or USDC, you can pool it within Saber, you can farm that, and you can start earning your rate of return all within the wallet itself. If you're completely new, this might sound crazy. Like this is a lot of steps just to use an application. Oh my God, I just wanted to click a button. But again, this is where I go back to like, it's easy to talk about and theorize these things in their abstract, but I think very few people actually go through the real process of figuring out yourself and actually doing it for yourself. And again, this is not about trying to make large returns or whatever. You could do this with $10. You could do this with 20. Like literally, it doesn't, like the amount doesn't matter. But like going through this full thing end to end. And then even further than that, you can go through the whole withdrawal process, the other side of it. This will teach you much, much, much more than you would ever learn trying to read about it or read somebody's review about it or read some thought piece about it or whatever. Like do it yourself. Yeah. Let me, I guess, give you a real example. So Solana was really purpose built for speed, transaction throughput, and low latency. Versus a lot of other chains will maximize more on the decentralization aspect and give on a lot of the speed or usability side. Solana is really purpose built, like its consensus layer to really maximize the speed and cost for the end user. So for example, this whole thing that I walked you through, using a DEX, then taking your stable coin that you converted into, put it into a pool, farming, going back out. If you were to do this on Ethereum, each one of these transactions cost you, again, it depends on the gas fee on that specific day. It could be as low as $5 if you're lucky, maybe as high as $50 if you're unlucky, maybe higher than that if you're very unlucky. There's like some big NFT sale or whatever. And so on Ethereum, you probably could not do this with $10. It'd be kind of hard. You'd probably need to put at least, I don't know, maybe like $1,000 in there just to be a little bit safe. In each one of those, you're going to attrition a pretty large portion of your funds just to do the basic transaction type stuff. And by the way, like each transaction of these, it usually takes anywhere between, on Ethereum, I don't know, if you're lucky, a couple minutes, if you're unlucky, 20, 30 minutes. And so each leg of this will take a while. And so I had this experience myself. I still use things on Ethereum. It's not like I'm a Solana maximalist or anything, but on Ethereum, I had to move from like this V2 pool to this V3 pool, and I had to undo one thing and go into this other thing. And literally this whole end-to-end process took like an hour-ish or so, and took a lot of money in gas fees. Contrast this with Solana, this whole process of buying, trading DEX into Saber, out of Saber, and this whole thing would cost you less than a cent, maybe less than a fraction of a cent. And you can do this whole end-to-end process in less than a couple minutes. Honestly, like you clicking the buttons will probably take longer than the transactions to clear. Just using Solana, it almost feels like Web 2. Things almost happen that fast and they have the responsiveness in real time, but it's all being transaction and processed through a decentralized layer underneath. So you get a lot of the benefits of the easier user experience, and you don't sacrifice as much on the centralization side because it isn't actually like a real decentralized network. So I guess maybe a higher level answer to your question is, I know the media narrative loves to talk about Ethereum versus Solana, and they're competing against each other, and one's going to outcompete the other. I honestly think that this space still is so early, and if we're really talking about competing against the world financial system or financial infrastructure or social applications, the crypto space is so abysmally small, or none of these things are competing against each other yet. Once we start to get to meaningful scale, then you might start to see, some switching costs or some real infighting between different communities. But right now, honestly, like these things are not net negative to each other. All this stuff is net positive. All this stuff is super new. All this stuff is still weird. Like a lot of the stuff is not necessarily ready for mainstream consumption yet. It's still very experimental stuff. And so they are different, but I wouldn't necessarily say like they're competing per se. Yeah. I think it was just like maybe it was no, that wasn't last week. I think it was 2 weeks ago. There was a big NFT sale on Solana called the Degenerate Apes. Maybe I won't go into all the details of NFTs, but NFTs are unique objects that you can own as the end user. And then these apes were generative. So there's a bunch of different traits you can get. So depending on which one you generate, you kind of get your own unique one-on-one ape that signifies you and you own it. It's in your wallet. It's in your control. Going back to the weirdness, very different than a centralized system or Web 2 or whatever. Like an NFT, when you buy it, like you actually own the thing. Like it's in your control. You can go and sell it later if you want to, and the money goes to you. It's not reclaimed by any centralized party or marketplace or whatever. Like it's literally yours. Like you can do what you want with it. It's your custody. Same thing with all assets. Like they're owned by you. They're not being held by a bank or a financial institution. Like your computer, the private key really controls the thing. So yeah, I guess to answer your question, I guess this has been a movement, not just in the Solana space, but in the crypto space as a whole, where these NFTs, people really identify with them. And they identify them so much that people will change their profile pictures to be the ape, the punk, the whatever, the NFT that they like and want to represent as themselves. And this will almost become their like avatar, their like personal identity, if you will. Again, sometimes a lot of things in the crypto space are a little bit more pseudo-anonymous. And so people will, come up with names and story and lore and stuff like this. A lot of this stuff is being colloquially referred to as the metaverse broadly, which is kind of a much broader, bigger concept. But this first very, very, very early version of owning your own image that represents you is kind of the first weird step in this direction. And again, like I won't say like this is completely mainstream and everybody's doing this. And by the way, not everybody in the crypto space like is doing this either. But there is like a smaller portion of very hardcore people who are very into this kind of stuff. Yes. Yeah, I can go until 10:45. Again, I always bias towards usage. You could definitely join Reddit groups and Discord groups and Twitter or participate in crypto Twitter or whatever. But again, I think a lot of this, and it's fun to talk about, and people love to argue about things. And unfortunately or fortunately, a lot of crypto stuff tends to have a very like religious vibe to it. Like people get very religious about certain things, and there's a lot of infighting and tribes and blah blah blah. I guess that's more human nature. Maybe we're more related to the apes than we like it to think. But there's definitely people who participate more in the that aspect. Again, for me, if it was me trying to do anything in it, learning by doing is really the highest value exercise I would ever give. And so going back to it, I guess if you wanted to simplify it, set up a wallet yourself, use Phantom, use an application yourself, Saber, whatever, just look at anything in the Solana space and use it. And I don't know, maybe like buying an NFT or something. And again, you don't have to buy the super crazy expensive one. Find the one that's like the cheapest and whatever, just to go through the process of buying, owning, and you can even just resell the thing to recoup all your costs, so you're not net out anything. But literally, if you just go through all these things yourself as a user with very limited directions or guides, and you needing to kind of figure this out for yourself and understand this, you will have a much, much, much deeper understanding of how this stuff works, why the way it is, why it is a little bit weird and different than traditional Web 2 experiences, and like what the benefits and downsides are for you in using this stuff. Because again, it's different. It's a very different paradigm than we're used to. It's not like logging into Twitter or Facebook and making a tweet. It's a very different onboarding flow. It's a very different thing you're doing kind of at the end of it. Yeah, one of the again, I don't tend to be very super crazy religious about the stuff. So like I'm happy to take this one on. Although yeah, if you ask the same question to other people, they might not react the same way. But yeah, to me, one of the biggest criticisms that people from the outside portray into Solana is that you're giving up on the decentralization aspect. And two aspects of this. One, the more obvious one is you have a smaller set of validators that are validating transactions, and it's not as widespread, if you will, than other things like proof of work or whatever. And then the second one is that because Solana is very high throughput and there's a lot of data that goes into it, it's harder to bootstrap your own full node directly from the system. So to get the whole transaction history. And so you're relying on outside providers, which re-centralize the whole thing again. And you can't just run the stuff on commodity hardware. Let me take this in sort of twofold. So one, while yes, in spirit, there is a smaller set of validators validating this stuff versus like a proof of work where anybody can participate with a laptop or GPU or ASIC or whatever. When you actually look at the mining ecosystem and how mining is centralized, both in terms of pools and large providers, proof of work is not so decentralized either. Again, you can just look at all the Bitcoin miners and concentration of it, or even on the Ethereum side and all the concentration of it. There are very large scale industrial players doing this for profit motivation. A lot of them were based in China. A lot of them are not so based in China anymore. But there is a large centralization aspect to proof of work too. It's not immune from it. And then I don't think Solana is as bad as most people think. So for example, looking at the stats, there's 939 validators in the Solana ecosystem, and 19 of them have a cumulative stake of 33% in total. And none of these are owned by the same company. None of these are like run by Solana. And all these are geographically dispersed and spread out. So again, it doesn't go for the hardcore version of you needing hundreds and hundreds of thousands of all little tiny things. But a lot of this is being improved upon and worked on too. Like Solana came out with staking pools, which distribute stake to smaller stakers to try to even out this. So the team really, really works on this, but this is kind of the current state today. The second aspect is the ability to validate all these transactions. So for whatever reason, there's this very strong ethos in the crypto space that you need to be able to spin up and validate all transactions from Genesis block till today on something as low powered as a Raspberry Pi. Like it needs to be able to run on a very, very low powered machine, and everybody should be able to do it no matter where they are. And while I think that's a very noble concept, I do think that it doesn't necessarily need to be this way. Like most people have a computer or laptop with like GPUs and like good CPU or whatever. And you don't need to minimize this for the smallest set of low-level commodity hardware. And so this is the biggest difference that Solana does. Solana optimizes for high-end GPUs. It optimizes for all of the parallelization that a high-end computer can give you while giving on the low-level commodity stuff. This in combination with its consensus mechanism, proof of history, which I won't get into all like the technical details, like this is the reason why it can be so fast. And again, in my opinion, I think that's a fair, it's a fair thing to give on. It's not for everybody. People can criticize it. And again, you can use a different protocol if you really want to. But Solana made different considerations to get the outcome that they wanted. And they took things that were more practical, less religious. So it's more trying to build this from an engineering or systems oriented way, less for like this purely religious idea of this needs to run on like a Raspberry Pi. Again, a lot of people might disagree with a lot of this stuff, but in my opinion, I think it's a very rational approach to take.